All right, this is a unique investing opportunity that I found tonight that if you're into this, I think is a pretty good strategy and investment on how you could generate some passive income and accumulate a stock that you want pretty dang cheap. So, this is USA Rare Earth. Earlier this year, they exploded off the IPO. So, like you can see, they came out March 12th and just shot up like a rocket, right? Because that's what IPOs generally do: initial interest, and then they fall off, and they kind of find a middle somewhere in between. You see this a lot on IPOs, but as you can see, we're like towards the lower end of the range. It could go lower. It could definitely go lower. Like, you have to be okay with holding this and stomaching some volatility. But the cool thing about this is because it's volatile right now, and I actually think this is an interesting investment. Like, they're mining rare earth metals, right? So if you think about it, if they're mining these and they're, keeping an inventory of it, then over time, their inventory automatically appreciates because the more they mine, the less there is in the earth, right? It's pretty obvious. Like, it seems like a solid investment long term, right, with what they're doing, because their assets are going to appreciate, and that's what gives their company value. Anyways, so if you're convinced, cool. If you're not, cool. But I just thought I would share this with you guys. So what you can do with this, whenever it moves down drastically, right? Like, because it's going to have pretty volatile movement. Like today it went 4%. It's flat on the week, down 10% on the month, down 20% in the past 3 months. So you see what I'm saying? Like, it's still very volatile, but it's stabilizing. Anyways, all right. So this is a long-winded way of trying to tell you what I'm telling you. The options, because the implied volatility is so high right now, are trading for a crazy premium. So if you sell options, which if you don't know how to do that, you just come to the option screen with your brokerage, and then you hit sell, and then you pick the expiration date, right? So like in this case, what I'm showing you is on the month, right? So on a month, the price is $9.44 right now. Let's see. I'm on the call side. Sorry, I need to switch to puts. All right, so if you sell a put, yeah, this is what I was trying to show you. This is crazy. So $9, which means you have to buy 100 shares at $9, which is $900, right? Selling a put on that gives you a 110 premium. So you're getting a $110 credit to put your money up as collateral, and if the price comes down to that point, you have to buy the stock, 100 shares of the stock for $9. But no matter what happens, as long as you let the contract expire, you get to keep the $110 of premium. So you're essentially getting a 10% discount on the stock. But because it's near the bottom of its range, right? Like we're seeing when it dropped to the floor, it hit like 575, and then there was interest there, and then you're seeing it starting to stabilize, but it's developing a base right about $8. Okay, so it's gonna be somewhere around there by the time it stabilizes, and with that knowledge, you can make some interesting moves. When you see it move down rapidly, like big percentage move in one day like that today, it spikes the option prices. So you sell that, you go June 27th, sell $9 put, and you see I'm getting a credit in my account for $110. The second I sell that, the very second that I sell that, they put $110 in your account. And then as long as the option expires worthless, you keep the premium, and you don't have to buy the shares. If the option gets exercised, you have to buy the 100 shares, you still keep the premium. So you see my point. Like, this is a cheap investment that long term will probably pay you in just growth, but you can trade options around it and make a good amount of money right now because you're getting in early. And I just think this is a pretty good opportunity. And if you want help with the strategy, you can message me or whatever. But on the call side, you can do the same thing, right? So if it moves up 4% in a day, you would see this sell calls, and you'd see those prices probably like $1, $1.10. So in that case, you're putting your shares up as collateral, and if the price hits your strike price and your option gets exercised, you have to sell your shares for the price that you set it up, but you still keep the premium. So you make a profit on the shares, and you keep the premium. and then you're out of it until you see a big move down again. You can sell puts under it, and you can continue to do this. But the cool thing is, if you get exercise on the put side and you start to get shares, you can sell calls and puts at the same time, which this is called the wheel strategy. But it doesn't always make sense to do that because premiums aren't always great. Like, you have to time it, right? Like, and you'll see if you just watch the premium prices how that works. But yeah, basically you're generating a 10% profit every single month right now, just for holding them. Like, and yes, the price can move, but you see what I'm saying? Like, if you want to accumulate this over time, this is a great deal. If you're trying to trade it, don't do this. Does that make sense? So for anybody that's interested in investing in rare metals long term, this is a really good way to do it right now. All right.